So we have reached agreement with staff, and usually what happens is you reach agreement with staff makes recommendations to the commission, and then the commission votes. So anytime we make announcements about that, we are clear that we've reached agreement with staff. The commission hasn't yet voted, but what we've agreed is to dismiss and move on. We're actually getting the SEC we had put in escrow a potential fine of $125 million. We're actually taking most of that back, including the interest that had been earned along the way. And I think it's just evidence that the Gensler SEC was on the wrong side of the law. And thanks to the new leadership at the SEC and in the White House, I think we're seeing a much more constructive, much more pro-innovation. We want these industries to grow at home.
When you say most of the $125 million you had parked in that little fund in case of the worst case scenario, what's left? Can you give us some?
The SEC is going to end up with a $50 million. The U.S. government's going to get $50 million. We've even talked about making that available in XRP. But look, at the end of the day, this is a major step forward. I think if you kind of zoom out and look at this, the Trump administration is absolutely living up to their promises.
Hey, what's going on, bull runners? Welcome back to the channel. Imagine this. You're standing on the edge of a massive opportunity, a tidal wave of wealth building potential in the crypto world, but something's holding you back. It's like you can feel the market buzzing, coins are surging, and new doors are opening, but there's a fog of confusion. Are you missing the one move that could change everything? The truth is the crypto market is shifting fast, like right now. And if you don't know what's happening, you could be left behind. But don't worry, there's a way through. Today, I'm pulling back the curtain on the biggest crypto news shaking the market. We're talking game-changing updates that could put you in the driver's seat. From Ripple's next move to a flood of institutional money waiting to pour in, and even a surprise twist from global trade policies, every single detail matters. Stick with me because at the end of this video, you'll see the pathway forward clearly. And here's the kicker. If you stay with me until the end, I'm giving you an exclusive sneak peek at Altcoin Pro University, our thriving crypto community where everyday investors like you are learning to master this market. Plus, we will be jumping over to X to find out all the breaking news that's happening in the financial world today. We will also be jumping into the charts for XRP, and we'll be taking a look at our next resistance and support levels. Plus, we will be looking at our short-term and long-term momentum waves for XRP. We'll take a deeper look into Ripple consider paying $50 million penalty. We'll dive deeper into Trump exempting select products for tariffs and the crypto benefits, and Asia holding crypto liquidity, but US treasuries will unlock institutional funds, and so much more in today's video. And if you're like most people where you don't have the opportunity to spend hours a day in the crypto news like we do here on this channel, make sure you subscribe today. And if you're feeling bullish about this current bull run, let me know by commenting 777 down below. But first, let's head over to CoinMarketCap and check out the overall health of the crypto market today. The total market cap coming in at 2.71 trillion, up 3.16%. We are definitely starting to see some signals of potentially breaking this bearish market structure. We do need to break above this 2.86 trillion, 2.9 trillion to get a new higher high. Then, as we have been tracking, continue to wait till we bust back above 3 trillion, which is the ultimate sign we may be back in bullish structure. Fear and greed index coming in at 32, yesterday at 27. As you know, recently we had just bottomed out at 15 back on April 8th. Altcoin season still not doing well. It is definitely Bitcoin season. Bitcoin dominance still coming in at 62.6%. It's up 1.81%. And when the new week kicks off, we'll check back in with the Bitcoin ETF tracker. Last week was an awful week for us to the downside. Top 5 trending coins according to CoinMarketCap today: XRP number 1, Pi number 2, number 3 Jamsey, number 4 FHE, and number 5 SUI. Top 5 cryptos by total market cap: Bitcoin coming in again, finally breaking above $1.7 trillion. Ethereum almost at that $200 billion level at 198 at number 2. Number 3 Tether at 144 billion. XRP at 126 billion. BNB at 85 billion. And wrapping it up, we got Solana at 68 billion, number 6. Top headlines over on X. Cointelegraph posting bullish. Senator Loomis claims if Bitcoin is held for 20 years, pursuant to the best modeling available, we can reduce our national debt by half.
Bitcoin is easy to store. It is immutable. It is scarce. We can protect it in individual vaults that can be secure. and hold it for 20 years. If it is held for 20 years, pursuant to the best modeling available, we can reduce our national debt by half.
And as we continue to track, the United States government is definitely getting on board as far as Bitcoin goes. Senate Banking Chair Scott says major Bitcoin and crypto bills will be passed by August. Digital assets are critical to American dominance.
Under the Biden administration and the Kitzler at the SEC, they just didn't like crypto. What I've said very often is simply this: we must innovate before we regulate. That means allowing innovation to happen here at home in the digital asset space is critical to American economic dominance across the globe. The good news is President Trump is leading the way to a crypto revolution, starting here at the Banking Committee. And that's why we moved very quickly the Genius Act, focusing on the crypto world. That's how you get things done. It's passed through my committee in a bipartisan fashion. Next, market structure on its way to be heard in the committee, marked up, and I believe passed into law by August.
And on top of all that, you can see the fundamental news continues. Obviously, in the markets, when you're looking at the charts, it's not reflected yet. But check this out. U.S. White House says gold reserves may be used to purchase Bitcoin. You're not bullish enough. And in this post here, White House says gold reserves may be used to purchase Bitcoin. And the document quoting here, if we actually realize the gains on US gold holdings, which, as you know, Fort Knox and everything, that we should have tons of actual gold. Do we have it? We don't know. But if we do, and we realize those gains, that would be a budget neutral way to acquire Bitcoin. And why it matters, the potential of the U.S. gold reserves to purchase Bitcoin signifies a major shift in the country's approach to digital assets. The Bitcoin Act of 2025, if passed, could significantly increase the U.S. stake in global Bitcoin market. And as you guys saw in the intro of the video, Brad Garlinghouse does confirm that an agreement with the SEC staff to dismiss the Ripple case. Plus, Brad Garlinghouse in that same interview was talking about the historic acquisition of prime broker Hidden Road and what it means for the broader crypto market as the U.S. takes a much-needed pro-innovation approach with new leadership. We're moving past the SEC's war on crypto and entering into the next phase of market, true institutional flows integrating with decentralized finance. So with Ripple considering paying the $50 million penalty in XRP, we've also talked about the crypto stockpile, not just the Bitcoin strategic reserve, but there's also going to be the crypto stockpile. And we have Brad Garlinghouse talking about paying their fine in XRP. Now, it has already been in escrow as dollars, but they could make a change there. And in fact, that would end up saving quite a bit of money for Ripple, the company, because of the fact that they've been holding the XRP tokens and it's profitable right now. Hey, bull runners, are you feeling FOMO about this bull run without the right financial support? We're here to change that. We're not just about funding, we're about growing your business together. Whether you're investing in crypto, kicking off a new startup, managing your existing business, or looking to expand, we have personalized funding that meets your exact needs. Imagine starting your business or getting capital to invest $100,000 to $250,000 at 0% interest. That's not a dream, it's what we do. We've helped countless entrepreneurs like you with 0% interest funding without needing personal funds, income verification, or collateral. With just a 680 credit score, you qualify. We understand that your business can't wait, so take advantage of our quick funding approach. We look beyond the credit score with inclusive approval process that sees the big picture of your business or investment potential. Our flexible repayments are tailored to match your business cycles, ensuring you can manage repayments without strain. With access to our extensive lending network of over 5,000 options, we're committed to finding the perfect match for your business or investing needs. Plus, you'll have our dedicated team by your side, guiding you through every step of the funding journey. Whether it's buying crypto, hiring new employees, or launching a new product, we're committed to your success. Click the link to connect with our expert advisors and secure your business's future now. And they say here, however, a surprising detail has emerged on the ongoing settlements talks, which you could see Ripple pay its reduced $50 million fine using the XRP token. The ongoing negotiations follow Ripple's and the SEC's decision to drop their appeals, bringing the multi-year legal battle close to a close. Judge Torres originally set the fine at $125 million in 2024. Ripple complied by placing those funds in an interest-bearing account, but appeals process delayed any further action. A recent joint court filing confirms that both sides have reached a preliminary agreement, and they are now seeking final approval from the SEC's commissioner. If the commission votes in favor, this case could conclude one of the most closely watched regulatory battles in crypto history. More importantly, the use of XRP for settlement could mark a significant shift in the SEC's approach to digital asset. This turnaround would represent a major regulatory shift and could trigger further bullish momentum for the token. Since Donald Trump's election in 2024, investor confidence has sharply grown, pushing the token's value up more than 300%. And at the same time, institutional interest continues to rise, as seen in the wave of spot exchange-traded fund applications tied to the token. So very exciting for Ripple and the end of the case. Also very exciting for all of the XRP army that have been waiting for this for years and years to happen. But in my personal opinion, the most exciting part of this is if they are able to settle this with XRP paying the $50 million fine in XRP, because that would obviously save Ripple money because of the growth of the token's appreciation, but also because that money would be held by the United States government in their actual crypto stockpile. And in the biggest news today, with Trump coming out saying he's going to exempt some of these products from China, and tech executives and investors feared the effect of sweeping tariffs impacting tech products at multiple stages of the supply chain.
We just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University. Just go through the link in the description below, get in right now, watch the 26-minute video covering everything that Altcoin Pro University offers.
According to Customs and Border Protection, storage cards, modems, diodes, semiconductors, and other electronics were also excluded from the reciprocal trade tariffs. Large cap technology companies will ultimately come out ahead when this is all said and done. The tariff relief will take pressure off of these stocks, which were one of the biggest casualties of the trade war. Crypto markets are correlated with tech stocks and could also rally at risk appetite increases on positive trade war headlines. Following news of the tariff exemptions, the price of Bitcoin is now over 85,000, a signal that crypto markets are already responding to the latest macroeconomic development. Markets are hinging on Trump's every word right now. President Trump walked back sweeping tariff policies on April 9th by initiating the 90-day pause on the reciprocal tariffs and lowering tariff rates to 10% for countries that did not respond to counter tariffs on U.S. goods. Bitcoin surged by 9%. The S&P 500 surged over 10% on the same day that Trump issued the pause. The 10-year Treasury yield shot up to a local high of approximately 4.5% on April 11th as bond investors reacted to the macroeconomic uncertainty of a protracted trade war. The concession just given to China for tech exports won't reverse the trend of rates going higher. Confidence in U.S. bonds and U.S. dollar has been eroding for years and won't stop now. And here we see the United States 10-year bond yields. It had surged up in January of 2025 to 4.8 with a nice pullback all the way down to 3.9 as of recently. And then the crazy trade war started and boom, pumping to the upside from 3.9% all the way up to 4.5% with a little small pullback at the end of the day. But we are currently sitting at about 4.5% on the 10-year Treasury yield. Asia holds the crypto liquidity, but treasuries will unlock institutional funds. The disconnection between Asia's crypto liquidity hubs and U.S. capital markets has hindered institutional adoption of digital assets. For a long time, Asia has been the king of crypto trading volume. You can think Japan, South Korea, and Singapore. They're like the heartbeat of liquidity, keeping coins like Bitcoin and Ethereum moving. But here's a twist. The real game changer could come from the US. Tokenized US treasuries, basically digital versions of super safe government bonds, are catching the eye of big institutional investors. And the reason this is important is these funds have trillions sitting on the sidelines. And if they start pouring into crypto through tokenized assets, we could see massive rallies across the market. It's like opening the floodgates for Wall Street to join the party. Crypto needs a universal collateral standard. Crypto must evolve beyond simple tokenized dollars and develop structured yield-bearing instruments that institutions can trust. Crypto needs a global collateral standard that links traditional finance with digital assets, and this standard must meet 3 criteria. First, it must offer more stability. Second, it must be widely adopted. And third, it must be a DeFi native. Without this infrastructure, crypto will continue to operate as a fragmented financial system. To ensure that both US and Asian investors can access tokenized financial instruments under the same security and governance standard, institutions require a seamless, compliant pathway for capital deployment. And this is what we've been talking to you guys about on this channel for so long. The real world asset surge is going to come from trading instruments such as this. So why does this matter now? The next phase of crypto's evolution depends on the ability to attract institutional capital. The industry is at a turning point. Unless crypto establishes a foundation for seamless capital movement between traditional markets and digital assets, it will struggle to gain long-term institutional adoption. And what's funny is when I got into crypto in 2015, it was an anti-government establishment, right? Everyone was like, no, we want this to take out the Federal Reserve and this, that, and the other. But in order for Bitcoin to get to something like $1 million per coin, it really truly needs institutional liquidity that could come into the market. Bridging US capital and Asian liquidity is not just an opportunity, it is a necessity. The winners in this next phase of digital asset growth will be the projects that solve the fundamental flaws in liquidity and collateral efficiency, laying the groundwork for a truly global, interoperable financial system. And what does that sound like, ladies and gentlemen? That sounds like XRP and the Ripple platform as well. Jumping over to the XRP charts. First things, a couple of really important things are sticking out right now in the markets. Number one, we are still using our weekly spider lines, which are trend lines based on the drop from 2018 with the pivot point in the middle of April 2021. And then those give us lines into the future when you shoot a ray. And as we can see right here, we had a really important support of $1.90. We actually lost it, but it looks like this could end up being a Wyckoff schematic spring liquidity grab down here. And it is interesting where this price hit exactly, because if we take a trend line and we draw this horizontal line from the spike of November 23rd, 2024, it hit exactly off that as a perfect bounce point, and it's starting to make the surge to the upside. Now, what we do have in our trend waves down here at the bottom, we can see our short-term trend momentum wave. The shaft trend cycle has gotten close to the tippity top of the 100 level. So this is a good sign because we could stay trading here, but this also could be getting ready for a reset over the next couple of days in the weekly market. So this could eventually start to drop to the downside, reset at 0 again. So this is an important time for XRP over the next 3 to 5 days. First and foremost, we would love to break above this 30 exponential moving average and the 50. So that is the yellow line of the 30, and the 50 exponential moving average is sitting at exactly one of our spider lines here as well. It's going to be our next resistance, $2.24. If we break that level and we continue our short-term momentum riding, and our long-term momentum that we've been following, it actually broke into bearish February 5th and has been riding in the red below the 0 line on the Wolfpack indicator ever since. We haven't even had a break. We've had a retest here with a hidden bearish divergence, ended up sending us lower. But right now we do have nice curvature on this, and we're getting closer and closer. Over the next 3 to 5 days, we could break back above the 0 line and turn bullish when it comes to XRP. So price targets to keep in mind right now is going to be support level here at $1.90. We have to continue. There is a likelihood that we do come back, retest this $1.90 now that we broke out of it, could retest and then finally shoot to the upside. Our next resistance level is 224. After that, I'll be up here at 250. Now, something that's also very interesting to pay attention to, we've got this trend line that has started to develop over time. The initiation of this trend line, February 14th. We were riding it very closely as a support for quite some time, about a week here, from March 29th all the way into April 4th. Then the trade war information came out at the beginning of last week, having a real push down to the downside, testing off of this level here at $1.63. We are starting to make our move back to the upside, which is positive. We've broken back above this trend line. One very important level that I'm watching for is as we gain some bullish momentum, getting back up to this 250 level, we now have what was a support line of our symmetrical triangle back here, end of December, beginning of January. that is now turned into a resistance up here. So after we break the 250 spider line, we are also going to have this $2.63, $2.65 level that we'll need to break. Then we can continue our levels back up to $2.80. Another important indicator that I like to use is the RSI, and we've got a really great scenario happening right now. If we go back to December 3rd, and we use the touch point here of January 18th, and then we also use the touch point right here of March 20th and also March 25th as a trend. We do have, as of yesterday and today's candle, a nice trend break, positive to the upside. We have also now reclaimed 50, which is bullish territory on the RSI. Last time we got above 50 though, we lost it. Here we lost it, and here we lost it as well. But if we take a look back a little farther, we were dipped down here, and we actually had the break above the 50 on January 1st, and we had that extreme pump to its new all-time high all the way through January 18th. So breaking above this 50, maintaining above the 50 is bullish indication all the way up until we get into that 70, 80 level. Then we start to become overbought, and we got to watch for a pullback at that level.